Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for this Wednesday, October 7th. My name is Ian Saunders, and joining us here this week as well is Sara Maley. And we are coming in this week to the first podcast for the final quarter of 2020, being as the third quarter wrapped up there at market close last Wednesday. So coming in here with this week marking the first full week of market action in the month of October. And it has certainly been an interesting past few days with movement there yesterday. We were looking like we were going to have some decent gains throughout most of the day and up until yesterday afternoon when markets decided to move a little bit further south. But coming in and looking at markets this morning, we're seeing a pretty significant gains from most of the major market indices, with the S&P posting a gain of about 1.8%, at least at the time of this recording this afternoon. And then looking at the chart of the S&P 500, the chart that we've been continuing to really monitor over the past several months, actually, has been that 20-point chart of the S&P. So if you're following along there on the platform and you're looking at the default chart of the S&P 500, over on the left-hand side, you can click on other scales, and one of those being that 20-point chart. And in looking at that chart, we got the new all-time high printed at the beginning of September up there at 35.80, and subsequently saw some movement further south, down south from those overbought levels, with the 20-point chart ultimately giving three consecutive sell signals to post that near-term bottom at 32.20, and has since reversed back up into a column of X's, reaching levels actually through movement yesterday morning at 34.20, which is also going to set up a spread triple top formation there for the index on the 20-point chart. So interesting to note that the declines yesterday afternoon, it did not actually lead to a three-box reversal on this a little bit wider term 20-point chart. It did on the default chart. You'll see that depicted there this morning. But here on the 20-point chart, again, that one that we've been continuing to follow, did not see a three-box reversal down, so it's still sitting at that triple top formation with the market back up around that box, at least at the time of this recording this afternoon. So definitely some interesting points to keep note of here. We have near-term support offered on this 20-point chart at that 32.20 level that we got to there towards the end of September, with further support offered from there around the 31.40 to 31.20 point, and then down around 3,000, getting down towards where that positive trend line is on this 20-point chart. So no lack of movement, and certainly no lack of headlines that we see going on around there, with a lot of things going on as we come up towards the election at the beginning of November. But not all that much movement over the past few days on this chart for the S&P 500, printing that additional box there yesterday and setting up that triple top. But there has been some interesting movement there, Sara, on some of the other smaller market caps and the other styles that we see for the S&P, looking at some of those funds.
Hey, and so as you said, that we just finished the first full week of the fourth quarter, and over the last week we've seen pretty significant rallies from small caps and mid caps. Looking at the IJR, which is the iShares S&P Small Cap 600 ETF, which we use as a small cap proxy, we saw that fund rally just under 5% over the last week alone, and the IJH, the iShares S&P Mid Cap 400 ETF, up about 4.84%. And just to put that in perspective, the Qs and the XLG, so those with mega cap names, larger mega cap names, we saw actually finish the week in negative territory, down about just around 20 bips each. So interesting to see the areas that were lagging kind of pick up some steam. When we look at the trend charts of IJH in particular, we did hit an all-time high for that fund back in January. And, if we're able to break through this resistance that we've set up here at 198, then the next level of resistance is going to be that 210 level. And again, that's the all-time high that we printed in January. Small caps are a different story. They hit all-time highs back in 2018. However, we have seen, we are still sitting off of our January highs from this year at 90, but we have seen a reversal into X's, and there is the potential there to break through some resistance, and rally towards that January all-time high before the next level of resistance being that all-time high from 2018. and excuse me, the high in January, I believe, was 85. So yeah, we've seen these two particular funds rally. I think also what's notable is that each of these funds now has a fund score above 3. So we'll continue to monitor those. They've been hovering around between 2 and 3 range over the last few months. Mid caps and small caps have been lagging their large cap counterparts, and we saw that reflected in the Q3 performance, Ian.
That's right, Sarah. So it is definitely good to see the kind of further follow through in some of these other areas that, as you said, have lagged. And if we look at some of the performance through the end of the third quarter, coming in specifically through the Q3 2020 performance review, which was going to be found in the daily equity report last Thursday, which highlights some of the major market areas that we have, specifically the 6 broad major asset classes and some specific representatives within each. I'm looking to see which areas were moving higher and which might have been moving lower or not moving as high over the past 3 months. And coming in and looking at the particular table, we can see pretty strong outperformance from the equity side in general, with international equities actually on average outperforming the representatives we have there for U.S. equities, with international being the highest average performance in Q3 at an average return of 8.55%. But U.S. equities certainly not far behind with an average return of 7.73%. And in looking at those areas that did outperform within the U.S. equity space, we see momentum did pretty well across the board with the Invesco DWA Momentum ETF, ticker PVP, posting a 3-month return through the end of September of 13.5%, being the highest performing fund out of any of the asset classes that we have examined on this page over the third quarter. Small cap momentum also did pretty well, second best performing fund in that U.S. equity designation, at a return of just under 11%. But generally strong returns from most of these equity spaces across the board, as Sarah touched on. Mid caps and small caps were those lower performing areas, just the IJH and IJR, those lower performing areas in the third quarter. But definitely that recent outperformance over the past week will certainly be something to keep an eye out for as we head towards the end of the year, rather. On the international front, carrying through that momentum train, we see momentum did pretty well internationally also, with the Invesco DWA Developed Markets Momentum ETF being the higher performing of the 4 international representatives up there with a return of over 12%. Emerging markets as a whole, interestingly enough, actually did better than their momentum counterparts, with the broader EEM posting a return of over 10%, and the Emerging Markets Momentum ETF, ticker PIE, coming in a little bit further south at a return of just over 7%. But again, further strong performance from equities across the board, U.S. and international, and definitely interesting to see that those momentum areas have been the kind of bellwether areas within each of those respective asset classes over the past few months. In looking at fixed income, carrying through that international kind of outperformance, we see that international treasuries actually did a little bit better than domestic counterparts over the last few months, with a return of 2.63%. Although fixed income was the lowest performing area on average out of the representatives that we have from these 6 broad asset classes examined here. Commodities did pretty well there, with the WisdomTree Continuous Commodity Index Fund, that broader representative, posting a gain of over 10% there. And we see this outperformance from international equity, we see outperformance from commodities. And one of the things that we've been continuing to monitor over the past several weeks has been the further kind of movement south and the weakness of the U.S. dollar. And we see that reflected in the performance here, too, on the currency front, with the Invesco U.S. Dollar Index Bullish Fund being the lowest performing out of the 3 currency representatives that we have there, with a return of negative 3.69% in the third quarter. The broader currency shares, Euro Trust, was the best performing area within the currency space that we were looking at here, at a positive return of over 4% during that time frame. So in looking at the broader picture here, we see that strong outperformance from the equity front, and especially that strong outperformance from the momentum camp within the equity side. And another way that we've been kind of tracking movement within equities is through some quilts that we have on the platform that we update on a quarterly basis too. Those were actually found in yesterday's daily equity and market analysis report. You can go down to that ETF spotlight for those of you following along on the platform too. And in looking at the first quilt that we have on that page, which is essentially looking at best practices for smart beta exposure. Basically, we break out the multiple different factor representatives, looking at momentum, growth, quality, equal weighting the market, low vol, buybacks, and dividend achievers, and then value as those kind of major market factor representatives that we use. And then we put those into a quilt, which is essentially ranking each of those areas year by year from a performance standpoint. And if we come in and look at how that stacks up through the first 3 quarters of 2020, momentum is perhaps unsurprisingly the top performing factor out of those that we examined here on the domestic front, with our momentum representative there at PVP posting a return of 18.78% through the first 3 quarters of the year. And interestingly enough, one thing that we noted there in the piece, and definitely something to highlight, is that momentum was also the top performing factor for the year in 2019. And this is actually the first time we've seen one factor be the top performing area in back-to-back years, back since 2015. In 2014 and 2015, low vol was a top performing factor in each of those years. So definitely something interesting to note there, continuing to see that further outperformance from momentum. Momentum still trails the growth camp on a cumulative basis, looking all the way back through the end of 2007 through the end of September, with the growth camp, RPG, posting a return of 273% over that time frame, a little bit significantly better there than the momentum of 180% over the same time frame. But definitely an interesting place to keep an eye out on as we head through the next 3 months here. I'm looking to see if momentum can hold up that outperformance that it's sustained for the past several weeks. Looking in the international front, too, we see a similar picture. We see momentum continuing to outperform, momentum and growth being those top 2 performing factors within the developed market international equities over the past 3 months, and actually each of those areas being the top performing factors over the past 2 years, too, within the year in 2019. Looking at how that performance ranking stacked up. Number 1, momentum. Number 2, growth. We see that carried over so far this year. Number 1, momentum, and number 2, growth in that front as well. So definitely strong outperformance across the board on the equity side from the growth and momentum areas. And certainly will be places to continue to keep an eye out for there, Sarah, as we head through the end of the year.
Yeah, so I think earlier we were talking about some indicators that we were watching back to the small cap and the mid cap discussion. We with the recent rally, we did see the bullish percents for the SML and MID. So the bullish percent for the small cap index and the mid cap index, they did both reverse up into X's. And then we also saw the bullish percent for the New York Stock Exchange reverse back up into X's on Monday. So here this is just telling us that there's more participation. The New York Stock Exchange is going to be obviously wider than the mid caps or the small caps when you just isolate them. So it's more of a broader representation. So we did see that reverse up, which is a positive sign, and it's right around that 54 level. And it printed another X with yesterday's market action. So something to watch to see if we can continue, to gain some more participation. We also saw a reversal in the bullish percent for the OTC, which is another even more diverse or more wide universe that we look for. We also were noticing the PTs, the positive trend indicators. So this tells us the percent of stocks that are trading above their bullish support lines in each respective universe. We see that with the PTSPX right now has a level of 66. The Nasdaq 100 PTs around 76, the mid cap 58, and then the small cap 48. These are right all around the 50% mark, which anything over 50 we consider to be healthy for that particular universe. And so it is one to watch to see if that small cap can actually get above 50 on its chart, which it did reach 60 last month. It did pull back a little bit with some of the volatility, but we have seen that move back to that 48% level now. So something to watch. The Nasdaq 100 is going to have the highest reading right now. It also is the smallest universe. So, out of those 100 stocks, we do see 76 of them trading above their bullish support lines right now. So again, in an overall positive trend, just telling us that not only is participation, moving higher with the bullish percents, but also prices are generally moving higher with those positive trend lines. So again, we're just going to continue to watch those particular universes. So the large cap, which has been dominating year to date, and see if the mid cap and small cap areas of the market are able to, make ground that they've lost, since the beginning of the year. Again, they've seen significant rallies over the last week, but still in negative territory year to date. So just areas to watch. And then also in terms of what to watch in our daily equity report over the next week, we are going to have additional quarterly updates on Friday and of Monday. The last Friday and this past Monday, we did have updates on some of our technical leaders indices. So PDP and DWAS, looking at the stocks that moved in and out of there. And then today, with today's report, which will be posted around 6 p.m. Eastern, we'll have kind of our all asset class review of the third quarter. So with that, I hope you all have a fantastic week. And Ian, thank you for joining us. And we will talk to you all next week.